Every single housing boom in modern history has left clues. Clear, measurable signs that most people miss until it's too late. And here's the crazy part. Those exact same clues are flashing again right now in 2025. We're seeing inventory start to level off, builder permits quietly rising, and rents stabilizing after 3 straight years of spikes. That combination has only ever meant one thing in the past: a market rebound that turns into a boom. Before we break it down, hit like, tap subscribe, and drop a comment telling me what you see in your city, because today we're diving into the 5 indicators that always show up before a housing boom begins. Let's start by defining boom. It's not just rising prices. A true boom is when 3 forces collide: home values accelerate, sales volume jumps, and consumer confidence returns. Historically, that's the phase when everyone who was sitting on the sidelines rushes back in. In 2012, home prices in Florida rose nearly 12% after 5 flat years. By 2013, transaction volume was up 30%. That was the start of the last decade-long boom. The thing is, those changes didn't come out of nowhere. The data flashed warnings months earlier. And today, the same signals are starting to reappear. Now, this one caught me off guard. Everyone talks about interest rates as if high rates kill housing. But the truth? Every major boom has started within 12 months of peak rates. In 1983, 1994, 2000, and again in 2018, the Federal Reserve paused rate hikes and then eased. Each time, housing prices surged within the following year. In 2025, rates hover around 6.8%, and for the first time since 2021, the Fed signaled cuts could begin mid-year. When borrowing costs ease, demand snaps back fast because millions of buyers are still waiting for permission to jump. Takeaway: don't chase the lowest rate. Watch for the pivot. The boom always follows the pause. Here's the crazy part. The construction industry predicts booms better than Wall Street ever has. When builder confidence bottoms out and permits start ticking up again, that's your early signal. In 2010, housing starts hit record lows. By mid-2011, permits rose 15%, and prices followed within a year. Today, in 2025, builder sentiment has risen for 4 consecutive months, and single-family permits are up 9% nationwide, 15% in Florida. That's not speculation. That's momentum in motion. Mini story. A developer in Tampa paused all projects in 2023. Now he's breaking ground on 3 communities because material costs dropped and buyer traffic tripled since January. That's exactly how every boom begins, quietly. No boom can survive without jobs. In the years before every major price surge, employment and population both rose together. More incomes plus more people equals pressure on housing supply. In 2025, the U.S. unemployment rate sits around 3.9%. Florida, Texas, and the Carolinas are adding jobs faster than builders can add homes. That imbalance is the foundation of a boom. Example: the Orlando Metro added 45,000 jobs last year and built only 20,000 new homes. Guess what happens next year? Competition returns. Takeaway: track job growth like you track mortgage rates. Employment feeds demand, and demand drives booms. This one is sneaky because it's psychological. A boom starts when people believe it's safe to buy again. During the pandemic rebound of 2020, the University of Michigan's Consumer Sentiment Index rose for 5 straight months before prices took off. Today, the same pattern is re-emerging. Confidence jumped from 61 to 75 since late 2024, the largest gain since 2012. Mini story. A realtor in Palm Beach told me her open house attendance tripled in March. Not because rates dropped, but because people stopped believing in the crash narrative. That mindset shift is the spark before every boom. Takeaway: the market turns when fear fades, not when data changes. Now this one surprises a lot of investors. When rents stabilize but prices stall, that gap closes fast, and it usually ends with a price surge. Think back to 2011. National rents were up 5% year over year, but home prices were flat. By 2013, prices rose 20% as buyers realized owning was cheaper than renting. In 2025, we're seeing the same math again. Average rents in the US are steady around $1,975, while median home prices dropped 2% from last year. That ratio has not appeared since before the 2012 boom. Takeaway: when monthly ownership cost equals rent, renters convert to buyers, and that's fuel for liftoff. Here's how these 5 signals work together. Rates pause, affordability improves. Builders see it, permits rise. Jobs grow, buyers re-emerge. Confidence returns, transactions spike. Rents stabilize, buyers rush in. It's a domino effect that has played out after every downturn since the 1950s. By the time headlines say, housing boom, it's already half over. Takeaway: you can't time a boom perfectly, but you can spot its footsteps. If this breakdown is opening your eyes, smash that like button and drop a comment below with your market. Tell me if you're seeing builder permits, price cuts, or open house traffic picking up. Your insights help us see the national picture together. And don't forget to subscribe, because in part 2, I'm going to show you real case studies from past booms and how to position yourself before the next one takes off. Now that we've covered the 5 key indicators that always appear before a boom, let's put them into context. Because the truth is, history doesn't repeat exactly, but it rhymes. And every time the media says, this time is different, it never actually is. Let's rewind to 2011. The headlines were brutal. Foreclosures everywhere, prices down 30%, and people saying housing would never recover. Sound familiar? Here's the crazy part. While everyone was panicking, all 5 pre-boom signals were already flashing green. Rates had peaked. The Fed froze hikes and started cutting. Builders started pulling permits again. Job growth picked up. Consumer confidence rose from record lows. Rents jumped while home prices stayed flat. By mid-2012, the market turned. Prices in Phoenix, Las Vegas, and Miami rose double digits within a single year. Those who bought during the fear doubled their equity in 5. Mini story. An investor in Orlando bought 4 single-family homes between 2011 and 2012 for $90,000 each. By 2018, those same properties were worth over $260,000 apiece. That's the power of recognizing the pattern early. Takeaway: every boom starts quietly, when fear is loudest. Now fast forward. At the end of 2019, most analysts predicted housing would stagnate. Then 2020 hit, and despite global chaos, something strange happened. The exact same 5 signals reappeared. Rates fell. Builders slowed, then restarted. Mass migration began. Confidence rebounded by summer 2020. Rents spiked as people sought space. Boom. By 2021, we saw record price growth. In some cities, 20 to 25% in a year. But here's the crazy part. Everyone thought it was temporary. They missed that these were the same historical signals, just accelerated by circumstance. Takeaway: the setup for every boom is the same. Rate shift, supply constraint, population movement, and renewed belief. So here we are again. Rates have likely peaked. Builders are re-engaging. Migration hasn't slowed. Confidence is rebounding. And rents are flattening while home prices stabilize. If you line up 2025's data next to 2012 and 2020, the patterns are eerily similar. Example: in 2012, permits rose 15%. In 2025, they're up 9%. In 2019, consumer sentiment jumped 10 points. In 2025, it's up 14 points. Rents in 2011 leveled off before a 20% price increase. The same thing is happening now. Takeaway: we may not be at the peak of a boom, but we're standing at the starting line of one. So what does this mean for you? How do you use this information before the crowd catches on? It comes down to position, not prediction. Here are the 5 plays smart investors use before every boom. Acquire undervalued assets before momentum builds. Don't wait for record headlines. Look for stale listings, motivated sellers, or small cosmetic fixers. Secure flexible financing. Use loans that let you refinance or pull equity later. The boom phase rewards liquidity. Leverage rent stability. Stable rents mean predictable income while prices rise. That's a double win. Track migration and job data. Booms follow people. If a region's population is growing faster than new housing starts, demand pressure builds. Stay patient. Booms unfold over years, not months. Set your strategy and let time do the heavy lifting. Speaking of strategy, this video is sponsored by New Silver, one of the fastest growing lenders in real estate investing. If you're planning a fix and flip or looking to scale your rental portfolio, New Silver's got you covered. They specialize in fast approvals, flexible terms, and funding designed for investors who move quickly, not endless paperwork and waiting. Check the first link in the description to explore fix and flip and rental financing options today. Because when the next boom starts, speed matters. Most people look at housing data backwards. They wait for headlines. But by the time CNBC says boom, the best deals are gone. If you want to read the market like a pro, focus on these 3 questions. Are rates dropping or holding? A pause signals a coming shift. Are builders expanding again? If yes, professionals smell opportunity. Are buyers re-entering the market despite fear? If you're seeing that in your area, you're at the early stage of a rebound. Every boom begins when people buy, while everyone else hesitates. Let me share a quick story that shows how this plays out. In 2019, a teacher in Tampa bought her first townhome for $235,000 while her friends waited for prices to fall. By 2023, her home was worth $360,000. She refinanced, used the equity to buy a small rental, and now both properties pay for themselves. She didn't time the market. She recognized the signs and acted. Takeaway: confidence doesn't come from luck. It comes from pattern recognition. Every boom follows the same emotional curve: fear, skepticism, acceptance, FOMO, regret. Right now, we're somewhere between skepticism and acceptance. Investors are tiptoeing back in, buyers are testing the waters, and sellers are slowly gaining confidence. The next stage? FOMO, fear of missing out. And that's when prices accelerate. Takeaway: when people start saying, "I'll wait until next year," you know the cycle is about to heat up. Before we wrap up, another quick shout out to New Silver, because their timing couldn't be better. They've funded thousands of real estate investors across the country, providing bridge loans, fix and flip loans, and long-term rental financing. If you're serious about positioning before the next boom, head to the first link in the description to see how New Silver can help you fund your next deal, fast, flexible, and built for this market. Let's zoom out for a second. Every major housing boom followed the same pattern. Fear dominates. Builders slow down. Rates peak. Inventory builds slightly. Demand rebounds quietly. Prices explode suddenly. We're currently between steps 4 and 5. That's the calm before the storm. The moment where opportunity hides in plain sight. Mini story. An investor in Jacksonville once told me, "The best deals I ever made didn't feel like deals when I made them." That line sticks with me, because by the time it feels safe, it's already expensive. 2025 isn't about speculation, it's about preparation. Use this window to build your credit, strengthen your cash reserves, network with lenders and agents, educate yourself. Because when momentum returns, you won't have time to start learning. You'll need to act. And here's the crazy part. Most people watching this will still wait for proof. Don't be that person. The proof is the pattern. So, what always happens before a housing market boom? The same things that are happening right now. Rates plateau. Builders restart. Jobs and migration accelerate. Confidence rebuilds. And buyers quietly begin to return. Those aren't predictions. Those are facts. If you want to catch the next wave, watch the data, trust the history, and remember that opportunity always looks boring in real time. If this video helped you see the market differently, hit that like button, subscribe, and drop a comment below with your thoughts. Are you seeing the early signs of a boom in your city? Are builders getting busy again? Are sellers beginning to feel more confident? Share what you're noticing, because your local story could help someone else spot the next opportunity. And remember, you don't need to predict the future. Just recognize when history repeats itself. I'm Rodney, helping you see the market before the headlines do. See you in the next video.